put call OI dynamics.
This is strictly for intraday, right? And paid.
Yeah. Yes.
Sorry, total open interest is paid. What about historical TOI?
It's also paid.
Yeah.
Both are paid. So now let's say we take this one. So on January 21st, oh yeah, 21st on Friday, right?
Yeah.
Okay. So what this basically does is that it takes the total open interest of all the options, okay, and it plots them together, and then you can track of that particular expiry, and you can track them how they are behaving together, call options as well as put options. And this is PE minus CE, and there's a formula using which we calculate this value, but it basically tracks how this change in open interest gets tracked using this PE minus CE value. Like, when it is bullish, when it is bearish, like that. Okay.
Yeah.
Now this can be used for intraday trading
Yeah, this
purpose.
is only for intraday. There is no
Yeah,
historical, there is no yesterday's data. It is only intraday.
intraday data.
Yeah.
So
And
you,
again, even for stock options, there are some, what, 15, 20 stocks for stock options also.
yeah, around 50 or something like that.
Yeah, 50. Yeah.
Yeah. Let's say, again we can check Maruti. So here what we will do is that we actually choose fewer strike price. Yeah, I
Yeah.
mean we can check. It's okay. Yeah, as you can see here,
This is clearly
it
bullish.
clearly bullish from the get go. If you follow this P minus E, that is what it is important. So it is going up, so you buy it and put some kind of stop loss, and that's it.
In fact, there is a futures chart also, and there is this green, sorry, the light blue shaded area. So you can
Yeah,
see here it shot up in the morning. Then after about 10 o'clock, you see the purple line going up. You can take long anywhere here, and which was near what around what are the futures price 8,050 or so,
yeah,
and it went up to 8,200.
yeah,
Yeah,
exactly.
yeah. And even
So that
then,
is
even when the futures started coming down, the PE minus C was still rising.
yes.
Yeah.
So this is exactly what it does. It's kind of tracks with your price action, but it gives you additional confidence of how the open interest buildup is behaving and how it is supporting the market.
In fact, the best way to the way I look at it is what is happening to the green line and what is happening to the red line. When the
Yeah,
green line is falling and the red line is rising, that is
going up.
very bullish.
It's very bullish.
Yeah.
And that exactly it reflects this purple line.
Yes.
So this is the total OI, and here is a change in OI. It's pretty much similar, but this OI change thing, it's much more easy to track.
Yeah.
Like, this is falling, and this is uh, remains same, more or less.
In
But
fact, this
this
is the
difference,
another example. What I was saying, the red line is not rising, though
yeah,
the green line is falling, which means Maruti
yes,
was not was having support, but it was not rising. That's why Maruti did not rise much in the second half because the red line
yes,
was not rising.
yes, exactly.
Yeah.
And green line is falling because there's a short covering in call options. So
Correct.
people who have shorted, they're covering, and so like it's kind of bullish, right?
Yes.
So and that's exactly we see with this CE minus PE. And there are many people who use this kind of thing for doing intraday trading. And maybe I think we can do one particular video on this.
We have already
How
covered
to
it in
trade.
one chit chat.
Okay, okay.
Yeah.
So that's what it is.
Yeah.